Hey guys, what's going on? So in this video I want to show you how to turn $70 into $1,030 in about an hour and 45 minutes trading options, call options to be specific. So if you don't know what a call option is or options are, an option is the right to buy 100 shares of stock at whatever price, strike price it is that you buy. So a strike price is this. Here's an option chain. You go to trade. Let's say stock is trading at $50 and you buy the $55 call. And let's just say you paid 50 bucks for it. You bought one call. So you paid $50 to get the $55 call. Now, if the stock goes to $60, then you can sell that at $5.50 because the original 50 cents turns into $50. So you'll see on here, like, it looks like I paid 70 something cents, but really it's 70 something dollars because it's controlling 100 shares. So one contract is 100 shares of control. So you see, if you're buying out of the money options, they're cheap because there's not so much of a high probability that the stock is actually going to get there and you're going to be able to use that contract that you have. So just think about it, right? So, you know, if I buy for, remember, we spent $50 to get this $60 call, right? Now, that cost me $50. For $50, I have the right, before this expires, and these are weekly options, so on Friday at 4 o'clock, I have the right to buy 100 shares at $60 no matter how high above $60 the price is. So obviously the higher you go above 60, the more money that option is going to be worth. When you go to $61, it's worth $1.50. 62, $2.50. This stock goes to 120, then $60.50 off of your 50 bucks, right? So you turn 50 bucks into like 6,000 something if it doubles, goes to 120. So they're a little tricky. Weekly options are more volatile. You have to really have some knowledge because if you're not right, you can lose all your money. If you're not quick at trading and able to hit the buttons you need to hit at the right time, it can cost you hundreds of dollars in profit. You can even lose money. You can lose all your money doing this. But if you know what you're doing, you can risk a small amount of money like I did with the $70 when you see something like this that's coming up with AMC and turn it into 1,000 or whatever. And then, you know, what you could do too, I mean, if I would have put $5,000 into this, right, we would have turned $5,000 into like 55,000, something like that, in an hour and some odd minutes. It's risky though. So, you know, I don't do that. You don't want to risk more money than you're willing to lose in trading. You never want to do that. You don't want to go out there and be a cowboy and, you know, risk $10,000 if you don't have it to lose. You only really want to risk 1% of your trading account per trade. So you don't want to lose any more than that. And that gets kind of tricky to do with options because, especially the weeklies, because they move so quick. So anyway, let's break down the trade here, why I got into this trade and why I chose to do this rather than buy shares. All right, so, you know, this day I traded AMC, that was 527, then I left it alone the next day, didn't do much. And then on June 1st, you know, I traded it again, did pretty good. So the next day, you know, after this ran in the after hours and then gapped up, this is the gap up. Remember I talked about this in the previous videos. I said, okay, well, I'm going to try in some of my smaller accounts that I have, like I'll trade a couple accounts for my friends. I'm going to try small little option plays and take a little bit of money and make them a bunch of money. And so that's what I did. Now, look here, this chart over here is the option chain. So this is for the $73 call. So when you're going to trade options in Thinkorswim, you got to go here, trade. You got to obviously type in AMC, which is already in up here. And then I went to, right, 73. So then I right-clicked that. I hit copy this. Now that's going to give me the chart for that option chain, right? So then I put it in my regular chart box, hit Control V, paste just like Microsoft Word, and boom, this chart pops up for this $73 call, how much they're trading for, the volumes down here. So it's like a regular stock chart, right? So this is how you trade it. You know, you don't want to go in here and you can do it like this. Oh, right click, let me go to 73, buy, let me buy 1, and then go down here and up 9, 8, let me change my mind, 6, 5, change the price down here. Like, you will get smoked in the market trying to do that. So you need to have your chart set up. So you copy it into here, right? And then look, I had 3 contracts, so I already have this set on 3. Now, when I want to sell, if I really want to sell really quick, I'll click this auto send. And if I hit sell the bid, this is the bid over here, then it'll sell all 3 of my contracts for this price right here, $2.86. If I hit join the ask, then I'm going to sell all 3 for the $2.97 because that's how much people are asking for. So as it gets to $2.97, it's automatically going to fill. Or there's other options you can put on here. Like I can put a sell market, which means just sell the position at any price. I don't care what it is, get me out. And now sometimes you will do that, but that's, you know, for a whole different kind of class there. So you want to do that in highly liquid instruments like S&P 500, the QQQ, NASDAQ, things like that. Not so much AMC. And sometimes when there's a lot of volume and the spread is very thin, the bid and the ask, if it's like a penny or two, then you can do it and get away with it. But if you're doing it where there's a huge spread, they're going to take your money all the time. You're going to get crap fills, and when you're trading options, let's say you bought it for 20 cents instead of selling it for $2, which when I say 20 cents, that means $20 because it represents 100 shares, remember. Instead of selling it for $2, right, and making 200, you sell for $1.80, right? So then you made 180 rather than 200. So you want to be really specific when you're selling your options. So anyway, let's go back to this trade. Here is the regular chart of AMC. And, you know, I told you I traded it a couple days before, so I'm very familiar with it. I kind of got the behavior down pat. I see what's going on. There's a lot of FOMO, people worried about missing out. FOMO is fear of missing out on making money, pretty much. So I'm going to highlight June 2nd. There's June 2nd. This is the whole day. Each one of these candles is 15 minutes. We're on a 15-minute chart here, and we are on a 15-minute chart in the option chain. So at 10:45, you can see here where I bought in. See where it says 3 at 71? So that's $71. So at 10:45, I bought in. Now I was looking at the regular chart. So why did I buy in at 10:45? Look, we popped up right out of the gate. We start to go sideways. We held up. The option's very cheap right now. And then I looked at the option chain, and you know how to, when you learn how to read these things, when I went to 73 that day, there was again like 100 and something thousand volume, and actually 73 was the last strike available. So 74 didn't even exist. And there were so many contracts bought on the 73 that I felt pretty confident in taking that, you know, in my small accounts and risking whatever, $70 to make a good amount of money. Now, the reason why that happens is because if you're a market maker, right, you're making the market, so you have to sell and buy stocks and options. That last strike price of $73 had the most volume pretty much of any contract that day. So when they sell that to me or to you, what they do at the same time is they'll buy stock, because if the stock goes up in price after they sold that, they'll be hedged, you see, because they own the share. So they're not gonna, if they just sold you that contract and they didn't hedge against, if they didn't buy the stock, when the price does go up that much, they're gonna be down a shit ton of money. So what happens? They sell you the contract, they gotta buy stock. So what else is happening? All the civilians are buying stock, right? The people on Reddit, the day traders, you got hedge funds out there buying stocks. Everybody knows this is a short squeeze, so people are buying the shares. So that's a little bit about what happens, you know, it's called a gamma squeeze. I was gonna do a video on that. Maybe I will too, but we'll see. So anyway, let's go back to the trade. So 10:45 I got in right here. We were going sideways again for another 15 minutes, and then at 11:15, you can see we got this pop, right? So we got a $40 to about 43. Now let's go to 11.15 here. So it's 10.45, 11, 11.15. So this option went from worth $75 to pretty much worth, let's see, the high it got was $1.30. So it almost doubled in price. So your $70 turned into pretty much $1.40 in 45 minutes. Now things start to get interesting. So here we go, 11.30, 11.45, 12. Now this is a good run, right? So we bounced off of this support here, which is why I got in, because the stock was holding up strong, and we came, up to about $50 from 37. That is a great move for a stock during the daytime. It's a great move for a stock. You'd be happy with that. You take it. For a $37 stock, if you get $3 on a regular day without a short squeeze, that's a good move. Your company now is worth 10% more if you're the owner of that company, right? So you go from 30 to 33. So you got to think of it like that. But that didn't and doesn't apply to AMC right now at the moment anyway. Eventually the fun's going to be over with AMC, and trust me, that day will come. Right now it's just all about the short squeeze stocks, since I pretty much started the channel, so that's all we have really to go on. I did another trade today on Workhorse that I'm going to post a little bit later too. So we'll get into that. So anyway, over here, right, here's noon. Now at noon, I saw this here. This is the noon candle. And I was like, okay, this isn't getting out of hand yet, but now remember what I say, always watch your volume. So here's your volume, right? So 11.45. All right, then we have 28 million shares. Noon, we have 45 million shares. Volume is increasing. People are getting excited. And that's what trading's all about. You have to understand the psychology. Like, people are getting excited. Okay, I bought this for $70. I'm going to sell this thing for $1,000 because people are getting excited. We went from 25 million shares. Now we're trading 50 million shares. All right, so 15 minutes later, we get this huge price. Now look, for a stock to go from $50 to 62 pretty much in 15 minutes is crazy. Now what happens is when it goes up a certain percentage, they'll halt the stock. So the stock does not trade. Everything's frozen. Your profit's frozen. You can't buy, you can't sell, nothing. They halt the stock. You can't do nothing for a few minutes, like 10 minutes, something like that. And usually when that happens, after that, traders and investors, they get nervous and they sell. So when the stock gets halted, it's going to drop pretty quick when it opens up. Now, that's what I thought was going to happen. I was like, all right, we're going to get halted. And I did have this, live, the trade, but I don't want to post an hour and 15 minutes video or speed it up because that kind of defeats the purpose. So anyway, when I saw this coming up, look, if you got price going straight up like a wall like this, sell it, because it's not going to last long in the stock market. If it seems too good to be true, and it seems too good, like you're making too much money too quick, and you'll get a feel for it, sell the position. You can always buy back in. Because look, I sold right here at 10.35, which is actually right here, okay, on this white candle. So, I could have gotten a couple more dollars, but you never know. Now, when I sold here, the stock did get halted on this candle. Then the next thing you know, when it opened back up, we dropped from 62 all the way back down, and this whole candle was erased. So if you bought in right here, now you're losing money. Yeah, you can see obviously from the chart it came back, and you would have made money if you held, but if you do stop losses, hard stops and all that, it's a different story. And that's another thing too with weekly options. You can't really trade them like you trade stock. So if you have, let's say you buy something for $70, if I put a stop loss in to sell at $30, you're going to lose your money every time. You're just giving away money. So you don't really use stop losses on them. Whatever you invest in a weekly option, you should be comfortable losing. So in this case, $70 in 3 different accounts that I was trading, I'm fine with that because the risk to reward ratio was well in my favor. So pretty much that's it. So this is options. That's how we can make money really quick. It's not like this every day, but you do have situations like this. And this thing with AMC and GME, GME was real crazy. AMC is really nice. But this kind of stuff has been happening all the time, for 7 years. It's just now, I think the pandemic brought a lot of new traders in and a lot of new investors, and people were trying to make money, so they got into the stock market. Now there's even more volume. So these huge price increases, we used to get short squeezes, right? But we didn't get any short squeeze like GME to $500. That was crazy. Now AMC, we'll see what happens with it. From what I understand, though, and I would imagine that Wall Street and the brokers are going to adjust to this, because you can see what happened last time with GameStop, right? Robinhood didn't let anyone trade. The brokers start shutting things down because they start to wonder, do they have enough money to cover, whoever's going to take this huge loss and whoever's going to have this huge gain. So I don't think this will last very long. I read some stuff about AMC today, pretty much saying you can't short it. They're not allowing anyone to short. Bunch of different things, but we'll see. There's always a way to make money in the stock market, though. So it really doesn't matter. You don't have to rely on any one thing happening to make money. You can always make money if you know how to read a chart and you know the volume and know how to trade. So, yeah, like I was saying, you want to be able to get in and out of these positions, especially if you're really trading. Like, to me, I was just messing around a little bit. I wasn't worried about losing to $70. But if I were trading in my account, or actually seriously trading a position on this, like I used to trade weekly options a lot. I stopped, though, because the volatility died down in the market. But if I had like $5,000 in this position, you're watching it like a hawk and you're selling it as it's going up. Because once, if it drops down to 35 cents and you bought it for 70, you're down $2,500. So, just something to keep in mind. But anyway, yeah, so when you learn options, they're great instruments to make money because you don't have to risk as much, you don't have to tie up as much capital, and you can make money very quick if you get the move right. So just wanted to do the video on that. And then one thing, too, I wanted to show you guys with selecting a broker. So when you select a broker, that choice right there is a huge decision, because that will determine whether or not you're able to sell earlier than anyone else, or what time you're allowed to trade. For instance, I think Fidelity will allow you to trade at 7. TD Ameritrade will allow you to trade at 8, and this is 7 a.m. and 8 a.m. Now, there's brokers out there that will let you trade at 4 a.m. So why does that matter? So let's look at this chart, right? Let's say, this happened 2 days in a row, actually. So let's say on this day, okay, so this is June 1st. You bought 1,000 shares at the end of the day. The stock closed at $31.99. So let's call it $32. Close at $31.99, $32. Then it runs into the after hours, okay? So here is the after hours goes to 8 p.m. So we'll find 8 p.m. here. 6, 7, you see the little gray down the bottom? That's the time. All right, so there's 8 p.m. Now the next day comes. Whoop. Actually, where did that stop? Here we go. 5, 5:30, 5:45, 6, 7, 8, 8:15. Okay, this one doesn't have that data on there. Then 6:30. Okay, so but all right. Long story short, then your broker determines when you're allowed to trade, and I'm going to use this day. We'll use this one. For whatever reason, that wasn't working. So let's say you bought stock, 1,000 shares this day, right at the end when the market closed. So you bought these 1,000 shares for $64. So you have $64,000 worth of stock. Then here's the post market, right? All the way up until right here, 1945. So the post market closes. After market closes at 8 p.m. So here's 8 p.m. So remember, you got 1,000 shares at $64. Now, if your broker allows you to sell at 4 in the morning, look, you could sell these for $77.30. So you're profiting 64, 74, $13,000, right? If you have Interactive Brokers. So Interactive Brokers lets you trade that early. Another broker I had, Centerpoint, let you trade that early. It depends on who you're clearing through. But Interactive Brokers is the cheapest broker out there. They're a very good broker. Customer service is a little bit hard to get through because they have so many clients, but they have a really good trading platform. And you don't even have to use their platform to trade, actually. I mean, you can still use Thinkorswim, and then what you do is just have the order box for Interactive Brokers right there on a different screen on your computer or on the next, whatever. And you can place the order through there because the times and the prices are pretty much exactly the same on all the platforms. It has to be, right? It's the stock market. So, yep, there you go. You could have made $13,000. Now, let's say you had TD Ameritrade, right? So you bought these shares, what do we say, for $64,000. Let's go to 8 a.m. All right, here's 8 a.m. So the TD Ameritrade people, look at this. As soon as it opens up, remember, we bought for $64. So we have $64,000 position. 8 a.m. comes. Now you're allowed to trade the next morning. Stock's only worth $60. So that's why you got this red candle here. Because when all these people who are allowed to trade actually start trading, and let's say they got in here, now they're losing money. So they dump it real quick. And then a good trick we used to do during the pandemic was right at 9 o'clock selling to the Robinhooders. I think Robinhood lets you trade right around 9. So these areas in the morning time, 4 a.m., usually the stock will be real high. 7, a little bit lower. 8, a little bit lower. It depends on what the news is and how it goes. But the main point is that you want to have a broker who will allow you to trade at 4 in the morning. And yeah, it's a pain in the ass to wake up at 4 in the morning, but look, you could have made $13,000 by just buying at the end of the day, holding it, going to sleep, waking up 4 in the morning, hitting sell on your cell phone, and that's it. Boom, money's yours. Rather than you wake up at 8 and you're down thousands. So yeah, Interactive Brokers is really good. So make sure you always have Interactive Brokers. Make sure you have 2 brokers if you're serious about trading and investing, because sometimes the platforms go down and problems happen. During the pandemic, all the brokers were overwhelmed. The system just wasn't used to all the volume. So you couldn't sell on TD Ameritrade sometimes. Sometimes you couldn't sell on Interactive Brokers. So you always want to be able to get in on the action, because when something crazy is going on, that's usually when it's hard, like to log on or to buy that or just a bunch of different things. So that's pretty much it for this video. A little bit about options. If you guys have any more questions about options, let me know. I know it's a little bit confusing. I'm going to do a long video about that to really explain them thoroughly. This was just kind of, a little explanation with some chart work and a sell of it. So yeah, take a little bit of money, make it into a lot of money in an hour and 45 minutes, $70 into $1,035. So that, and your broker, make sure you get a good broker. Interactive Brokers is good. They'll let you sell quick. But in my opinion, TD Ameritrade, this what we're looking at right here, they have the best charting software. So you can use this to chart, and you can use Interactive Brokers to sell and buy orders, and you can also have money in TD Ameritrade. So yeah, that's it. If you guys have any questions or anything like that, just let me know. If you know anybody who wants to learn how to trade or invest, send them to my channel. I appreciate it. And if you haven't already, please subscribe. Just hit the button. It's on the bottom right hand side, little white button down there, square, and hit like too. That will really help me out a lot. I appreciate that. And again, any questions, just let me know in the comments below, and I'll be more than happy to help out. I'll see you in the next video.